Let's get more from Daniel Ghali, a senior commodity strategist at TD Securities. Thanks for joining us, Daniel. I don't know if you heard there, David Rosenberg arguing that it's almost certain the US dollar will go down as interest rates are cut, and that's good for gold. Would you agree with that thesis?
Yeah, well, listen, Andy, thanks for having me back on the show. And in fact, I think, Andy, the point that's worth mentioning is that this is actually a very different gold market than it was just a few months ago. Right? Today, the market is already expecting a pretty significant amount of Fed cuts on the horizon. And in fact, we think that the macro funds that care about such things have already not only positioned for that in gold markets, but are holding an overweight position in gold markets. So that's already baked into the cake. And in fact, we see some froth today, which may be associated with the Trump trade, which has yet to reverse. So in fact, I actually think that gold markets are seeing for the first time in months some signs of positioning froth. This is also true, by the way, in Asia, where for the longest time, Asia was the primary driving force of the bull market that we've been seeing in gold prices. But with Asian currency pressures starting to abate, in fact, Asian currencies are now strengthening, the demand for gold as a currency depreciation hedge has substantially fallen. At the same time, your last guest was talking about CTA trend followers. Those are the commodity trading advisors, the algos that trade on the basis of trends. They're already max long. And so the positioning setup in gold here has just very much deteriorated.
Now, that's it. You said, I think, positioning froth. You think that gold may be getting a bit ahead of itself here?
Yeah, absolutely. When we look at the macro fund positioning in particular, and again, those are the types of funds who care about things like Fed cuts that are priced into rates markets, we actually see that their position sizes are larger than would be warranted by the current rates market pricing. So either macro funds are positioning for a deeper Fed cut, or something else, such as the Trump trade, has contributed to some froth in this cohort's positioning.
Now, the Trump trade would be partly, if former President Donald Trump is reelected, anticipation that his policies would be inflationary?
That's partly the case. It's also, I think a lot of participants have looked at gold's performance under the last Trump presidency. Gold had performed very well, and so macro funds are perhaps expecting the same to be true in the next presidential cycle if Trump is indeed elected.
Is it fair to say that Russia and China have a long-term policy of trying to undermine the US dollar as the global reserve currency?
Well, I don't know if that's a long-term policy. I certainly think that in China in particular, they have been putting some building blocks in place to try to capture additional share of the world's FX reserves. That's particularly true for some nations such as in the Middle East, where we are seeing some progress being made on that front.
Because that's something America must take very seriously. It's such a huge boon for them having the world's currency. It's like a giant reserve currency. It's like a huge interest-free loan to the U.S. economy.
Yeah, I think absolutely. But for the time being, that's still not much of a concern to the U.S. because the U.S. dollar is still the dominant reserve currency in the world. And there really is a lack of substitutes out there.
Daniel,
gold, by the way, is one of the currencies that is gaining market share as well.
Sorry, Daniel, what currency was that?
Gold.
Oh, gold.